good afternoon. Traders with coffee and biscuits, huh? King of swing. Coffee and biscuits. And Vince went to Starbucks. Very good. Annie, you are late, I am late too, you know. Hello everybody. So good morning, good evening, good afternoon. I'm sorry, I was stuck in traffic. And this is Forex Trading Course 101. Remember what we're trying to do here. We are trying to build the three pillars. Pillar number one, the strategy and or the system. Pillar number two, we are trying to understand how risk management works. And pillar number three, which is the big one, is the psychology part. And what do champion beginner traders say? I am not going to live and die on a trade by trade basis. And he says, hi Yanis. Yanis, thanks for this excellent trader course service. Yes, Yanis is our boss. So pay your respects, you know. And remember everybody, also the quote on the left, when the market scares you, don't be afraid to do the right thing. Also remember that 90% of traders lose money in the Forex market worldwide. And also remember that the webinars are not trading or investment advice. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. So we closed yesterday the intermediate module. How this sounds, huh? So we are starting today the advanced module, which is strategy and systems indicators. And today is simple indicators number one. Okay? And if this is your first time, everybody, and you don't quite understand what is happening, when is happening, where is happening, please go back to Stochastic YouTube webinar page and start to watch the basic module. Lesson number one, what is market structure? Okay, so let's dive into the charts and let's start talking about indicators. And let me see, what is this? Okay, let's open a new chart. All right, let's open which one? GBP JPY, no, Euro JPY. It's Euro JPY. Boa tarde, mestre Zuelius, como você está hoje? Ok, Euro JPY, weekly, monthly, 4 hour, 30 minutes, no, daily, 2 hour, no, daily on the right, weekly, 4 hour, there you go, here. Okay, so today we are going to talk about the indicators, you know. Many times, everybody, you are seeing my chart, right? Something like this. And we are closing, right? We are closing the indicators because we are telling you, oh, we are not there yet, you know? Okay? So, Euro JPY daily chart, okay? Just an example. And after you've learned all the Fibonacci's, all the market structure, all the market wave, you know, support, resistance, pivot points and everything. Hello Janobi, Euro AUD. Okay, we can check Euro AUD, no problem. Okay, now simple indicators part one. Okay, what we need to learn is that we have two types of indicators. Okay, we have two types of indicators here on the left, and we have here on the right. Okay, what is the first type? The first type are the so-called leading indicators, if I'm not mistaken, are trying to predict the future price movement. Okay, and a great example it would be the stochastic. Okay, so the first one, you need to understand that we have leading indicators that are trying to predict the future of the price movement, and then we have the so-called lagging indicators. I hope my English is correct, not sure. Lag indicators that are not trying to predict, but they confirm the movement after the movement already happened. Okay, and an example would be MACD. Example would be the MACD. Okay, so we have leading indicators that are trying to predict the future, and we have lagging indicator that confirm the movement after the movement already happened. All right, so if we go to Euro AUD and we go on the daily chart, maybe not the best, and we go on the weekly chart, okay, and we compress the chart like this, okay, and if we are going to use the market wave, right, so extension, not maybe this one, which one is lower, which one is low, okay, this one is lower, so the market wave, right, extension, retracement, extension, okay, this would be one, and let's add MACD. Okay, now, and if we would check the MACD, it doesn't matter to go long or to go short, you would see, everybody, that the MACD is a lagging indicator. Why is that? The price, you know, because the movement already happened. If you just take this last downfall, you know, look where the MACD crossed. Let's make it bolder. Can you see, everybody? When the two moving averages crossed, the movement already happened. And again, you know, there is no right or wrong talking about indicators. There is no perfect indicator. Indicators also are not 100% guaranteed. So can you see, everybody, that the movement already happened? Agreed? Can you please show the slides with the two types of indicators? This one? This one, Miguel? Leading indicators are trying to predict the future price movement, like Stochastic, and lagging indicator, they confirm the movement after the movement already happened. Example, the MACD. Okay, everybody, can we move further, Miguel? And Miguel, you need to move to the next level, man. Remember the email. You know, you need to do something, man. All of your friends are somewhere else. All of them, I mean all of them, you know. You know, when you are in school, right? Everybody moves in the next grade, and me and Miguel, we are staying back, you know. Okay, Euro AUD, right? Now, let's say that Janobi wants to buy Euro AUD on the daily chart. Okay, and we have the MACD. So let's jump from the weekly. I'm going to delete this one. I'm going to jump from the weekly to the daily. Right? What is happening? What is happening? So this is the daily chart. And as you can see, everybody, looking here, you know, MACD crossed to go up, but it was a false signal. Yeah, right? Miguel is smiling. It was a false signal. Can you see, everybody? It was a false signal to go up, right? And but nonetheless it's the same. So if you would check this one, maybe not the best example, but you would see that if we go in the chart, you know, when the MACD crossed, you know, the move on the smaller scale already happened. Regan, why would you want a lagging indicator on our chart, sir? Great question. What do you think? Why do people use lagging indicators? Everybody, why would you use MACD? And it's all psychological. Why would I use MACD, everybody? Because, you know, why would I use MACD? Who knows the answer to the question? And in the meantime that you are thinking, everybody, let's put stochastic. Stochastic RSI like this, and restore to default, and we're going to just use the slow one. Let me check. Green. Okay, great. So like this and like this. And again, let's see the chart, right? Let's see the chart. Oh, I need to edit indicator. I need to put the level. So I'm going to have 20, and it's going to be black, and I'm going to have 80 like this. Okay, now talking about Euro AUD on the weekly chart, everybody. Zuelius is saying lagging indicator to confirm a movement, to confirm the trend. Yes and yes, but really, Regan, for the beginner traders, you know, the beginner traders are using lagging indicators because we don't have that much confidence. We don't trust ourselves yet, you know. Maybe we don't have enough confidence in our ability to trade, you know, or maybe we are not trusting our strategy, you know. I'm not confident on my strategy, so when I'm shorting the market or going long and MACD finally crosses, then I would say, oh, you know, oh, this confirms the trend or whatever, you know. So it's psychological. Okay. Now, if you take this downfall, everybody, again, MACD happened here after the movement happened. Look at the stochastic, you know. So when the stochastic is above the 80% zone, this is what it's called the sell zone, or the market it's overbought. Nothing difficult, nothing special. But as you can see, everybody, stochastic was in the sell zone way before the downfall happened. You know, even worse, you know, the MACD was telling you to sell. Let me just check. So Stochastic was U-turning when we were in an uptrend still, you know, but nonetheless, when the first bearish candle appeared, the Stochastic was falling down slowly. And this is all the difference that you must understand between the leading indicators and between the lagging indicators. And Victor is saying, because you need some tools to confirm your analysis, because it's all about probability. Yes, sir. Yes, sir. So what should we use? You know, what indicator should I use? Remember, all together, you know, all the bundle, take this course, everybody, you know, take this course and take this bundle, you know, the basic module, the beginner module, the intermediate and the advanced, you know, and you learned all of this: market structure, highs and lows, trends, trend lines, support, resistance, pivot points, candlestick formations, multiple time frames, Fibonacci crowns, news trading. And now you're going to learn indicators. Take all of this knowledge, you know, and try to understand that, as Victor said, with all this knowledge together, this is still a probability game. It's all about probabilities. And I have a comment on the other streaming platform, you won't see this on YouTube, and somebody's asking, can I trade without indicators? And the answer is absolutely yes. Absolutely yes. You can use indicators and you can trade without indicators. There is no right or wrong. It's according to your personality, everybody. And we learned that your strategy is highly correlated to your personality style. Okay, so there is no right or wrong. Should I use indicators? Shouldn't I use indicators? There is no right or wrong. Wherever you like. There is not, exactly, there is no right or wrong. You know, but if you are going to test or backtest something, just remember that leading indicators are trying to predict the future, and lagging indicators, they are going to confirm the movement after the movement already happened, you know. So it doesn't matter what indicator are you using, everybody, where are they helping traders, you know. So I would say that it makes sense to use lagging indicators to exit the trade. Question mark, don't you think, everybody? It makes sense to use lagging indicators to exit the trade. Why? Why is that? Because as beginner traders, many times, you know why? Because many times we close the trade prematurely. Period. End of story. And again, everybody, there is no right or wrong, you know. As somebody's asking, can I trade without indicators? Absolutely yes. But if I'm going to use leading indicators and lagging indicators, where this makes sense more, you know, well, maybe not for you, everybody, but to me it makes sense to use lagging indicators to exit the trade. Why? Because many times we close the trade prematurely. Make sense, everybody? So if I would have traded Euro GBP, okay, on the daily chart, you know, so if I would have traded this rally up in here, you know, and I would do this on the 1 hour chart, 2 hour chart, whatever, you know, 4 hour chart maybe, you know, and to exit the trade, you know, what can I do? Well, I can use MACD to exit the trade. Where is MACD? There you go, you know. No, not on the daily, you know, I would use MACD to exit my trade. Why is that? One more time, because many times I'm closing my trade prematurely, and then the lagging indicator is going to confirm the movement after the movement already happened. So I would trade this rally, you know, and again I would not trade on the daily, but daily is my confirmation time frame. I would trade on the 1 hour chart. Let's go to the 2 hour chart, right? 2 hour chart. See, everybody? I would close my trade or here, which is here, or I would close my trade up in here, which is here. Make sense, guys? And again, you know, indicators are not 100%, you know, they are not magic, you know. They have their own fallacy. Sometimes they work, sometimes they don't work, you know. Or if I would use MACD to exit the trade, so I would exit here, and then I would see this one, I would re-enter, you know, I would re-enter here and I would exit here again. So, and one more that it's mostly, you know, not everybody, but I know many traders that are using, and it's quite okay. So you would have the, maybe even better, the EMA cross, like 21 and 8 to exit the trade, you know, EMA cross. So let's delete this one. So I would trade the quadrant, I would go long on the quadrant, and simple moving. No, okay, I need to check momentum. Where is exponential overlap studies? EMA. Okay, add EMA, edit indicator. I would have 8, whatever color you like, everybody. I would have 8, and I would have another one, clone, which is 21. 21, color maybe black, like this. So as you can see, everybody, in this example, you know, and homework for you, you need to backtest, okay? Just don't blindly use those indicators, but if you would compare the where would you exit with MACD and where would you exit with the EMAs, you would exit here. So it would be much better, you know, if you compare the first exit with the MACD and you compare the second exit of the MACD, you know, and you compare the EMA cross, you know, so EMA cross, it's in the middle, right? So in general, EMA cross in this example would give you a better exit. Questions until now, everybody? Does this make sense to you? How we are going to answer to the question, you know? Where should we use, or why should we use leading and lagging indicators? You know, this is the answer. Any questions so far? No questions? Okay, great. Now, what about leading indicators, you know? What about leading indicators? Well, leading indicators, what are they? Stochastic is a great example, you know, then RSI, right? RSI is another one, you know. Those are the most popular ones, you know, RSI, stochastic RSI, you know. Which one then? Oh, it's the moving average, right? Moving average. MA, moving average. You know, moving average is you turning, it's trying to predict the future. So everybody, are you using some kind of indicators already? Let's make a poll, everyone. What kind of indicators are you using? Maybe to enter the market, maybe to manage your trade. And remember, everybody, there is no right or wrong. Are you using RSI? Are you using... Is anybody using any indicators? Either way, everybody, so Janobi was asking about Euro AUD, you know, and so indicators are going to maybe help you to give confidence to your trading, but, and this is the bad news, everybody, this is the reality check, okay? Indicators won't help you unless you know what you are doing. So Euro AUD, 2-hour chart, 1-hour chart, what should I do? What should I do? Should I go short? Should I go long? Well, it doesn't really matter because indicators won't help you, everybody, unless you know what you are doing. Rina is saying I'm using RSI. Miguel says I never used indicators unless you consider Fibonacci type of indicator. No, it's not. Fibonacci is a tool. When I use indicator, I use RSI, stochastic, and EMA crossover. See, everybody, there is no right or wrong. And we can drop EMAs. 21 and edit indicator, one more, right? So clone 8, you know, like this. So what should we do? On the 2-hour chart, where is the chart? There you go. Should we go short or should we go long? Stochastic is saying buy, MACD is falling down and the EMA didn't cross. What should we do? Should we go short? Should we go long? This is why, you know, we are telling you indicators won't help you unless you understand and unless you know what you are doing. Meaning, what pattern are you trading? You know, are you trading what pattern? This is where your stop loss is going to go. You know, so what are other simple indicators, you know, to lagging indicators, you know, it makes sense to use lagging indicators to exit the trade, and, you know, for trade management, we can use both, you know. There is a specific indicator, everybody, and it's called Fibonacci. Fibonacci, that you can use for entry, and you have, everybody, it's just another example, you know, there is no right or wrong. You have Fibonacci smooth to exit the trade. King of Sui, counter trendline break. This is not an indicator, it's a tool. EMA, Reagan says EMA, stochastic, this is what I'm planning to use from today. You need to backtest, everybody, how, you know, you cannot just say, oh, I'm going to use stochastic. Well, backtest. What if your indicator is not going to help you? Everybody, what if your indicator is not going to help you? So let's say, everybody, that I am shorting, okay, I am shorting Euro AUD on the 2-hour chart, right? And what is the challenge? What is the challenge with indicators, you know? The challenge. Indicators are going to affect your view of the market. Indicators are going to affect your view of the market, meaning we will not, we are going, oh, how can we rephrase this? You know, we most likely won't trade what we see. This is the challenge. Indicators are going to affect our view of the market. We most likely won't trade what we see. Why not? I'm shorting Euro AUD and the stochastic is in the buy zone. What I'm going to do? Oh, I love stochastic, you know. Stochastic is the best indicator ever. Okay. I just entered the trade here and stochastic is telling me, oh, the market is going to go up. What I'm going to do? And my stop loss is above here. And this is the $1 million, the £1 million, the €1 million question today. If I'm closing the trade because of the stochastic right now, what I'm going to do? What bad habit I'm going to execute? I entered the market on the black counter trend line break, you know, because before I have the EMA cross, which confirmed me the downtrend. I have MACD crossing, confirming the downtrend, and I entered the market and the stochastic is in the buy zone. what I'm going to do. And look at the candle is going against me right now. It's just switching from bearish to bullish and going back and forth. What I'm going to do most likely, everybody, if you are not doing this already, with the RSI and Stochastic and MACD. And this is a real challenge, you know. Indicators are going to affect our view of the market. Let's make a poll, everybody. Who in here wants to close the trade? Because the Stochastic, which is predicting the future, is in the buy zone. Remember, there is no right or wrong. Question, can I use a Stochastic to exit? Absolutely yes. Absolutely yes. Because when you are going to backtest, everybody, you are going to see that every time that the Stochastic was in the buy zone, predicting the future, let's make a quadrant. Every single time the Stochastic was in the buy zone, predicting the future, the market went up. Buy zone here, second quadrant, buy zone here, you know. It doesn't matter how much it went up, but it went up. See? Quadrant, the market went up with the Stochastic. Red arrow pointing up on the chart. Quadrant on the Stochastic again, red arrow pointing up again. And now we are again in the buy zone. I should not close when I was in this trade. Janobi, what about you? You asked for Euro AUD. So what is going to be? And we have a song again. Euro AUD. What is going to be? Euro AUD. What is going to be? So what's the answer? The answer is what is, and it always been the challenge. I need to decide the answer. I need to decide what indicators I am going to use and stick with the rules. And this is a challenge. Stick with the rules. No exceptions. I don't know if my English is correct, everybody. So no excuses. If you are using Stochastic to go out of the market, now it's time to close the... Oh, but the market is falling. I don't care. Close the trade. And this is a real challenge, everybody. You cannot jump from the Forex course 101 to the Forex Trader course 202 without learning this skill. Stick with the rules. No excuses. Because if you are not going to obey your rules, you are going to suffer. How can I close? It's the market. Well, you are using the Stochastic. Or change your strategy, whatever. But when you have the rules, you must obey the rules. Period. End of story. King of Swing, hold and move stop loss to break even. This is a technique, King of Swing. Today we are talking about indicators. Okay, so delete, 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 delete. Okay, now let's implement Heikin-Ashi. and Heikin Ashi, there you go. I'm going to change the candles to lines. There you go. This is Heikin Ashi to enter the market, right? So when I have two blue candles, you know, I'm going to go short, and I'm going to add Heikin Ashi smooth, right? To exit, you know. So I'm using Heikin Ashi, the blue or the white, to enter the market. And I need to change color, right, on the smooth. So it's not going to be blue, it's going to be green. There you go. Not to mix the colors. Okay. I'm going to enter the market with the blue or the white, and I'm going to manage my trade. I'm going to close my trade when the Heikin Ashi smooth is going to change colors. Victor is saying trade management will base off probability. It will keep on until I get more than 2 or 3 indicators. There is no right or wrong. But as you can see, everybody, the challenge is the indicators are going to affect your view of the market. We most likely won't trade what we see. And one more, you know, one more challenge. One more challenge. Many times your leading indicator is going to show the opposite position to your lagging indicator. And this is another challenge talking about indicators. Many times your leading indicator is going to show the opposite position, the opposite direction to your lagging indicator. Happens all the time. EuroCAD weekly chart, candles, the two common used, MACD and Stochastic. MACD and Stochastic RSI. Many times. You know? Look in here. I'm going to wait for your answer, everybody. What are you going to do in here? Or what can you read? What is the MACD telling you? And what is Stochastic telling you? Delete. And this is on the weekly chart. Huge time frame. Most relevant. More relevant than the daily 2 hour, 1 hour, 4 hour chart. What is MACD and Stochastic telling you to do? So, as you see, everybody, we have a lot of challenges, don't we? Challenge number 1, we need to backtest indicators. We need to make them as a rule. And we need to understand that they are going to affect our view of the markets. But I must obey them, right? You know? What are you going to do? Everybody? MACD show is telling you to buy and stock, and you don't have the crystal ball. So the market it's like this. We are here. It was a structural reversal. And the MACD is telling you to buy and Stochastic is telling you to sell. What are you going to do? And it's not this, no, it's not only once, you know. Let's look at structural reversal. Look in here, it's the same. MACD telling you to go short, Stochastic telling you to go long. What are you going to do? And you don't see the future. Would you? Oh, I would obey the MACD. You won't. Believe me, you won't. Why not? Because it's against our logic. Would you short an uptrend? Come on, let's be honest. I'm a beginner trader. I have no clue about the markets. And I'm saying now to FXPassion, yes, I would go short. You will not. You would not. And if you would, I would call you in my office and we would chat. Why did you short an uptrend? Oh, because the MACD was crossing. What is MACD dictating the market? So do you think that the market are moving because of the MACD? Come on, wake up, you know. And this is another golden nugget today, everybody, for you. The markets are not moving because of the indicators. You know, do you think that the market is moving up because Stochastic is in the buy zone, or MACD has crossed, or because the Bollinger Band hit the band, or because the RSI is above the 50? Do you believe the markets are moving because of the indicators? What's the answer? Headaches. You are almost there. So the answer is no, of course not. Of course not, you know. If the markets would move because of the indicators, everybody would be a zillionaire right now, not a millionaire, a zillionaire, you know. The markets are not moving because of the indicators. The indicators are following the markets. And because the markets are unpredictable, and they are, also the indicators are not guaranteed. Sometimes they do work, sometimes they don't work. King of Swing, would long together with reversal crown. King of Swing, I don't understand your question. I'm sorry, King, can you rephrase your question? I don't understand your question. So what is the answer? The answer is don't use. So the answer, it's not a rule, everybody. There is no right or wrong, but the answer, you know, don't use leading and lagging indicators at the same time. This is the answer. Don't use leading and lagging indicators at the same time. You are going to have what Reagan says, headaches. So if you are going to decide, everybody, that you are going to use a leading indicator for an entry, use just a leading indicator for an entry. If you are going to decide that you're going to use a lagging indicator for an entry, use just a lagging indicator, not both of them. Trade management the same, don't use leading and lagging. And for exit and to exit the trade is the same, don't use leading and lagging indicators at the same time. Make sense, everybody? Saying would go long with crown. Okay. Homework until tomorrow, everybody. Homework. Decide what indicator or indicators are you going to use for your entry, trade, management, and exit. Homework until tomorrow, everybody. Yes, you can also decide to not to use. Yes, sir, of course. No, not a rule. You can decide, I'm not going to use any indicators for entry, trade, management, or exit. No problem. But if you're going to use, everybody decide until tomorrow what indicator or indicators, plural, are you going to use for your entry, trade, management, and exit. And try to follow the answer. Don't use leading and lagging indicators at the same time. Okay? Monday, Tuesday, Wednesday. Next level number 2. If you want to start your own trading business and attract investors, connect and we will talk about your needs and wishes and find the specific business model for your trading business. Okay, on Friday we are going to talk about all of them, the 5. Okay, this is for today. Our time is up, everybody. See you back tomorrow. Until tomorrow, stay strong and choose your indicator with passion. This is FXPassion signing off.